Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 22nd, 2025, and we're diving into RTX's first quarter earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. RTX, the world's largest aerospace and defense company, has just released its Q1 2025 results, and there's a lot to unpack.
Revenue and profitability overview. Let's start with the top line. RTX reported sales of $20.3 billion for the first quarter, which is a 5% increase compared to last year. John, what are the key drivers behind this growth?
The growth was primarily driven by an 8% organic increase, excluding divestitures. The commercial aftermarket segment showed significant strength, up 21% year-over-year, which contributed to the overall sales increase. Additionally, the adjusted EPS of $1.47 represents a 10% increase, highlighting improved profitability.
And what about their cash flow performance?
RTX generated an operating cash flow of $1.3 billion and a free cash flow of $0.8 billion. This strong cash flow performance underscores their operational efficiency and ability to return capital to shareholders.
Segment performance. John, can you break down the performance of RTX's key segments?
Absolutely. Collins Aerospace reported sales of $7.2 billion, an 8% increase driven by a 13% rise in commercial aftermarket sales. Pratt & Whitney saw a 14% increase in sales to $7.4 billion, largely due to a 28% surge in commercial aftermarket. However, Raytheon experienced a 5% decline in sales, primarily due to the divestiture of their cybersecurity intelligence and services business.
It seems like the commercial aftermarket is a significant growth area for RTX.
Indeed, the demand for commercial air traffic is driving this growth, and RTX's strong product offerings in this space are paying off.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of $1.34 for RTX, but the company reported an adjusted EPS of $0.27. What does this mean for investors, John?
This is a significant beat, with RTX exceeding expectations by $0.13. It reflects the company's strong operational performance and effective cost management. The positive sentiment among analysts is likely to bolster investor confidence.
How do you think this will impact RTX's stock price?
Given the EPS beat and strong segment performance, we can expect a positive reaction in the stock market, potentially driving the stock price higher.
Future outlook and strategic initiatives. Looking ahead, what is RTX's outlook for the rest of 2025?
RTX has provided a robust outlook, with expected sales between $83 and $84 billion and adjusted EPS ranging from 6 to 6.15. They also anticipate free cash flow of $7 to $7.5 billion. However, it's important to note that these projections do not yet account for potential impacts from new tariffs.
How is RTX planning to navigate these potential challenges?
CEO Calio mentioned that the company is well-positioned to handle the dynamic environment, focusing on executing commitments and leveraging their strong backlog. They plan to provide more details on tariff impacts in future communications.
Key takeaways. In summary, RTX has delivered a strong start to 2025 with impressive sales growth and an EPS beat. Their strategic focus on commercial aftermarket and operational efficiencies is clearly paying off. John, any final thoughts?
RTX's performance this quarter sets a positive tone for the year. Their ability to exceed EPS expectations and maintain a strong outlook despite potential challenges is commendable. Investors should keep an eye on how they manage tariff impacts moving forward.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on RTX's performance in the comments below.